Time now for the markets with Leighton, and you say a new cattle on feed update is out.
That's right, Artis. Many analysts expected the numbers to reflect a big year-to-year drop in placements. Now this week in the markets, crops continue to decrease in size. The low Mississippi River slows grain shipments, as analysts say some hog liquidation is inevitable. The USDA has made substantial cuts to the 2012 corn and bean crops for the second month in a row. In the week since the August numbers were released, Extension Ag economist Dr. John Michael Riley has been doing some analysis of the new report. So John Michael, is it pretty much more of the same in this latest crop report?
Yeah, I think that's a good way to put it, especially given what we saw with the July crop report and supply and demand report, the reduction in the corn yield and corn production, and then also with respect to soybeans, we saw that take place again. They reduced the national average yield to 123.4 bushels per acre for corn and 36.1 bushels per acre for soybeans. Both of those were lower than last month and actually a little bit lower than what the market was looking for those yields to be. That pulled down both the total production and the ending stocks as well. So we're back to this tight supply situation we were hoping to get out of with both these crops, but unfortunately due to the drought, it doesn't look like this is the year for that to happen.
And since then, we've seen the market kind of go a little bit both ways, but basically we still have high prices is bottom line.
You're right. When the report came out, there was a little bit of a knee-jerk reaction. We saw corn hit a record level. Soybeans were in the same boat, kind of on those coattails, and since then it's really leveled off. But if you look at this, kind of take a step back and look at it for, from more than just a couple of days, both these markets have been pretty steady since about mid-July, when the knowledge of the fact that this drought is very serious was set in. They've both been trading fairly steadily over the past couple of weeks, and we are back in those. We're still in that same price level.
All right, we keep hearing about the need and possibility, of course, of having a ration corn, especially as time goes on here. That's still a concern, right? Especially when you think about ethanol and other components.
It's something that's going to have to take place, and that was reflected in the report as well. Feed use down, ethanol use down, exports all pulled back. The good thing is, especially on the livestock side, is there's just not a lot of cattle out there to feed, so I think that's going to help offset some of that feed for corn pressure, but the other two uses are still heavy in there.
As far as soybeans, I know they've had over the past few weeks a little more rain out in the Midwest, the chief concern as far as the drought. Are the beans able to recover any, or is there any idea what the impact may be?
If there's any recovery, it's going to be minimal, so I don't expect to see a tremendous amount of benefit from that.
For soybean producers, some analysts are advising a wait-and-see posture as far as making sales. Trader Alan Brugler does recommend farmers use some price protection. Brugler says he has done some three-way spreads and has got some 16-20 November puts as a price floor.
We've sold some $18 and higher calls against those. We've got some downside puts sold just so that if it does suddenly decide tomorrow, okay, we've done enough. Nobody sends you a notice when the market's going to top out. So we think good risk management is to have a little bit of protection in place. Don't need to go heavy on the cash sales here, but have some headline news protection.
Water levels continue to drop in the Mississippi River, which transports 60% of the nation's grain. This is snarling the movement of harvested crops. AgFacts.com reports that in some locations, such as Phillips County, Arkansas, grain is piled up on the ground outside elevators because of the backup. Low river levels are forcing shipping companies to only load their barges about 70 to 75% full. This week's trivia quiz is about peanuts. It is projected that Mississippi's crop is around 50,000 acres. That is a 233% increase over 1 year ago. Now our question, when was the last time the Mississippi peanut crop was this large? 1929, 1937, 1946, or 1961? I'll give you that answer in a few more minutes. Analysts seem to agree that some sow and hog herd liquidation in the U.S. is inevitable now because of high corn and soybean meal prices. Analyst John Roach says profitability in the pork sector is tough, and he's got the data to prove it.
We look at something that's called the livestock crush, which is the price of corn, the price of meal, and the price of hogs. It's at the lowest that our data has been in the last 9 years. The profitability in the hog business is really tough. And we've seen the sow slaughters pick up a little bit last week, was the biggest week of the year. We think it's going to pick up some more. We think that it's indicating maybe a little bit of liquidation, but the USDA in their forecast today said that the third quarter would average $5 a hundred better than the second quarter, but the fourth quarter we're going to lose $6 compared to where we get to in the third quarter. So we're concerned about the hog market longer term.
A well-known New York City restaurant has adopted QR codes as a way to connect customers and beef producers. The menus at Delmonico's in NYC now feature quick response codes by each selection. Customers can scan the code with their smartphones and obtain detailed information about the origin of the beef they want to order. This includes profiles of the producers and information about production practices. Meetingplace.com reports the program is made possible through Where Food Comes From. That is a retail and restaurant labeling program. Now a quick look at our trivia answer as we end the markets. C is the correct choice, 1946. And next week in the markets, analysis of the cattle on feed report.